A stock which is definitely a bull versus bear case. You should hear both sides of the story. If you've heard to Kush and Vineet so far, you've definitely heard the bear case. But I'm going across to Puneet to talk about Wipro. Puneet, what is the bull case, if any, for a Wipro today?
Well, there are a few points we've put together, but a bear versus bearish case is something that I would like to rename this particular segment. Not too much positives essentially in this particular results for Wipro. While the large deal wins were a key positive, and that's the first bull case specifically, up 17% on a year-on-year basis as well. They were largely expected because of the new, UK insurance deal that the company had won a couple of months ago. So it was expected to come in and also boost the revenue as well as the EBIT margins, not to be, at least in this particular result. We've seen, the deal wins not translating into any kind of revenue growth, and that's the first bear case, essentially. If we can move on and look at the second key bull and bear case, management has mentioned that they're expecting revenue to recover in H2, specifically of FY26. Europe is something that they are positive on going forward, so something to watch out for. But sequential guidance in Q1 of FY26 is a huge negative. Negative 3.5 to negative 1.5% growth is what's anticipated in Q1 of FY26. Brokerages had penciled in a negative 1 to a positive 1% growth actually. So it's a big negative there, which essentially has triggered most brokerages to come out and actually mention that FY26 might be a year where the company might actually not grow revenue for the third consecutive time. When you look at the third bull and bear case, they are endeavoring to maintain margins in a narrow range, and that will give some solace to investors going forward. But they are expecting clients to take a more cautious approach going forward on consumer discretionary spending, and hence that will lead to project delays as well. Finally, in terms of valuations, currently at 17 times price to earnings for FY27. Now, that is actually the lowest amongst the large cap players, but there is no growth in sight. So essentially, it might not actually be a value play, but a value trap maybe. And brokerages are also penciling in that aspect. They are saying that this could be, of course, the third consecutive year of revenue decline, and margins, while improving from the 15 to 16% to going all the way to 17% for the last 2 quarters. The playbook for Wipro, might be in terms of growth, and that's currently not in sight. So overall, there are a few aspects moving around for Wipro, but not too many on the positives.
Okay, thanks for that, Puneet. The other one which is really moving in trade is Sonata Software. Puneet, would love your view on that as well. But we'll do that in just a minute. Let me quickly go across to Vineet Bulanchkar. Vineet, I know you're not in favor of the large cap IT, but how would you play IT therefore at this point? You can't completely ignore it. Would you play through mid-small cap? Are there any specific counters where value has started to emerge within the mid-small cap space? Or would it be ER&D, or would you ignore it completely?
So Sonata Software, by virtue of its performance, it's a very low-lying stock and very under the radar, and they've generally been performing very well. So that is where the stock would lie my interest. Persistent is another stock which is very, very AI heavy, and they've got good credentials around that, is what I would be looking at. But apart from these, I would tend to stay away from the IT back.